Hi friends, during this market crash, almost 94 lakh crore worth money has been wiped off from the stock market. Almost all mutual fund categories, be it large cap, small cap, mid cap, flexi cap or any other mutual fund category, most of them have fallen by 10%, 15%, 20%. And in fact, individual mutual fund portfolios also have taken a huge hit. And a lot of new investors are panicking right now whether mutual funds are the right instruments for a long-term wealth or not. And therefore, I am creating this video to bring you lot of data insights. The key data point that I want to present you today is that not every mutual fund within a particular mutual fund category has fallen by the same amount. For example, have a look at my screen. You will see that in Flexi Cap mutual fund category, Parag Parikh Flexi Cap Direct Growth Mutual Fund has fallen by only 1.49% in the last 6 months since the time this crash or the correction started. Only 1.49% correction. This is absolutely mind-boggling, because even if you look at the Nifty, for example, the most stable component of the stock market has fallen by almost 15 to 16%, but Parag Parikh has managed to become resilient in these market falls and have fallen by only 1.49%. Now, by no means I am saying that you go and invest in Parag Parikh Flexi Cap mutual funds, but the point is very, very simple, that within a particular mutual fund category, there are mutual funds that are down by almost 20%, 25%, but on the other hand, there are mutual funds that are only down by, let's say, 3%, 4%, 5%. And if as a mutual fund investor you are worried about these short-term fluctuations, also called volatility, then you really need to keep away from high volatile mutual funds. And therefore, I am now creating this video. What I intend to cover in this video is I'm going to look at each mutual fund category, 5 to 6 mutual fund category. And in those mutual fund categories, we are going to look at mutual funds that have fallen the most, and we are going to look at the mutual funds that have fallen the least. We are also going to look at the last 5 years rolling returns, because if you are one of those investors who are not worried about these short-term fluctuations, you will say that, Rahul, I am not worried about these short-term falls. I'm going to look at the rolling returns because that gives me the consistent picture. So I'm going to share you that data as well in this one single video. Also, if you don't know me, my name is Rahul Jain. I'm a full-time investor and a full-time content creator. Almost on daily basis, I write in-depth exclusive analysis for my YouTube community member. If you're not yet a member, you can consider joining my YouTube community, because you will learn practically. I post almost on a daily basis about mutual funds, stocks, ETFs and various other assets that will teach you practically. With that, let's get this video started. So the first mutual fund category that we are going to pick up is large cap mutual funds. Have a look at my screen and you will see that in the last 6 months, the list of mutual funds here which have fallen the least. And on top is Motilal Oswal, that has fallen by almost 2.28% in the last 6 months, followed by DSP Top 100, followed by Canara Robeco. See the difference between top two. Motilal 2.28%, DSP 7.44%. So almost 5% more fall in the second one, which is DSP, but still they are less fall than the category fall. Category fall has been around 10.55%. So all these mutual funds that you see on my list have fallen less than the category return. Therefore, in my view, these are least volatile as per this market fall that we have seen. What about the most beaten mutual funds in the large cap category? So for that, if I just change the filter here, you will see that Quant large cap has fallen the most by around 16.92%, followed by JM large cap, followed by Bank of India blue chip, HSBC and Growth. These mutual funds have fallen the most if you look at the last 6 months returns. Now, if you're an investor that gets worried about these mutual fund fluctuations, then in my view, you really need to think about picking up those mutual funds which are less volatile, and therefore I have presented this data to you. Now you might say that, Rahul, this is only one-off market crash. What about longer term picture? So in that case, what we typically use is volatility, which is the measure of fluctuations in the mutual funds. For that, what I have done is in the large cap category, I have arranged these mutual funds in the volatility ratio. So for example, here if you look at the ITI large cap fund, Bank of India, JM large, Quant, HSBC, these are the most volatile large cap mutual funds if you look at the longer period of data. And to be honest, if you look at this current market fall, Bank of India, JM, Quant, HSBC, they are in the list as well. As if I just go back to data again, show you Quant, JM, Bank of India, HSBC, these are the ones that have fallen the most. And if you look at the volatility data, that is also telling us exactly the same thing, that over an even longer period of time, these mutual funds have been very, very volatile. So as an investor who is not comfortable with volatility, You might want to avoid these ones. Again, I'm not giving you recommendation, I'm giving you data points here so that you understand your investing style versus the mutual funds investing style. But if you're an investor who is not worried about the short-term noise, and if you are only looking for long-term, then you need to ignore this data totally. What you need to go for is the rolling return. So let me now present to you some data about the rolling returns. So if you look at my screen, you will see I've taken the last 5 years rolling return data, and you will note that Nippon India has delivered 20.28%, number one, followed by ICICI Pru Blue Chip. Third one is HDFC, Aditya Birla. These mutual funds have consistently delivered better return over 5 years period. That's what rolling returns actually tells us. Now, I'm again not telling you that you go and buy these mutual funds, because when you pick mutual funds, there are many other factors. For example, you need to look at the fund manager's experience. You need to look at the investment approach or the philosophy. Again, I've spoken about all of these factors in various videos on my channel. If you have not yet subscribed to my channel, you can consider subscribing to my channel, because once you watch 8 to 10 videos, then you start to connect the dots and you start to make learning practical for yourselves. But this is the analysis for large cap category. The next category is large and mid cap mutual fund category. Have a look at my screen. You will see that these are the mutual funds that have fallen the least in the last 6 months period. SBI large and mid cap has fallen by only 8.99%, followed by ICICI Pru, followed by PGIM India. They have fallen less than 10% overall. The category fall has been around 12.83%. The ones that have fallen the most, if I go and talk about that data here, Helios, ITI, I don't have the data because they might not have completed the last 6 months. So Quant has been a drag here. Quant large and mid cap has fallen by almost 18%, followed by HSBC large and mid caps around 16%, Bank of India large and mid cap around 15%, so on and so forth. You can see the complete list on my screen, but the point is very, very simple. These have been the most volatile mutual funds. If I now talk about the volatility over a longer period of time, not considering only this particular crash that we have seen. So let me have a look at that data here as well. So from that perspective as well, HSBC has topped the list in terms of the volatility, large and mid cap category, followed by Motilal Oswal, ITI, Mahindra Manulife, Bank of India, and Quant is at number 6 if you look at the longer term picture. So overall, these volatility data will help those investors who cannot really keep calm when the market is falling. But again, if you look at the rolling return data over the last 5 years, so if you're not worried about the short term noise, then from last 5 years return perspective, it's ICICI Pru large and mid cap that has given the best returns, followed by HDFC, Quant, UTI, Bandhan. All of them have given more than 20%, but clearly ICICI and HDFC and Quant, these are the top 3 from a returns perspective. Please also understand that past returns do not guarantee that your future returns will be the same. For example, we can't say that ICICI continue to be the leader in the next 5 years or so, because a lot depend on the fund manager, their investment philosophy, there are many other factors. So this return data that I'm giving you right now is only going to give you one side of the picture, which is the volatility data as well as the longer term rolling return data. And so far, if you're liking this video, request you to hit the like button. Let me know in the comments. It's simple. Thank you. Also, let me know any mutual funds that are very, very down for you. Let me know in the comments which mutual funds you hold and they are down by how much percentage. With that, let's go to our category number 3. The third category is mid cap mutual funds. Have a look at my screen. You will see the least fallen mutual funds in the mid cap category. Number 1 is Invesco, down by 11.16% in the last 6 months, followed by White Oak at 11.23%, similar, very, very similar fall, followed by HDFC 12%, SBI Magnum 12%, Motilal Oswal 12%. Overall, the category fall that we have seen in mid cap is around 15% as of 7th of March 2025, and these funds have done much better than the category. What about the other side of the spectrum? So if you look at my screen, you will see Quant mid cap has fallen the most, 19.21%, followed by Taurus, followed by UTI, Mirai Assets, HSBC. You can see the entire list on my screen here. But if you look at the longer term volatility picture, most volatile in mid cap category has been HSBC, ITI, Taurus, Quant, JM mid cap, Union mid cap. These have been more volatile. Now, if I speak about the rolling returns over the last 5 years for mid cap category, here is the good thing now you need to note. Here is an important really learning for us. Quant mid cap has given the best rolling return in the last 5 years, 28.86%, followed by Motilal Oswal, HDFC, Edelweiss, Nippon India, so on and so forth. Point is very, very simple. Although the Quant mid cap mutual fund has fallen the most right now, and is also showing high volatility. If I talk about volatility for Quant, it is at number 4. Highly volatile mutual fund, but over a longer period of time, if you look at the last 5 years rolling return, this fund has topped the mid-cap category over a 5 years picture. So the key takeaway here is that if you remain invested in your mutual fund that you really like, then over a longer period of time, these falls are not going to matter. But of course, if you're panicking because you're seeing all of a sudden 20% fall in your mutual fund portfolio, then my suggestion will be that you keep away from the most volatile mutual funds. Moving on to the next category, which is the small cap mutual fund category. Have a look at my screen. You will see that Motilal Oswal in the last 6 months has lost only 8.68%. This is a very good data to look at for small cap space, because the category is down by almost 16.8% and the index, small cap 250 index, is down by almost 20% in the last 6 months. But Motilal has managed to only fall by 8%. So good job here. Axis small cap 12%, Quantum 13.91, Invesco 14.45. You can have a look at the list here. If I now look at the ones that have fallen the most, Mahindra Manulife down by 20%, followed by Franklin, HSBC and Quant. They have really almost given 19 to 20% of the fall from the peak. Therefore, these are the most volatile mutual funds. Have a look at the longer term picture here from a volatility perspective. LIC mutual fund is the most volatile over a longer period of time. Trust mutual fund, ITI, Bank of India, JM, Union, Mahindra, HSBC. Quant is in fact at number 9 in terms of the volatility in the small cap space. But now if I look at the rolling return in this space, you will see Quant in the last 5 years have delivered maximum returns, and it has beaten all remaining mutual funds with a very huge margin, 40.90% yearly returns over the last 5 years from a rolling return perspective, followed by Bandhan Bank at 32.25, followed by Nippon India, Bank of India, Tata Small Cap, Canara Robeco, and so on and so forth. So hopefully this gives you a picture for the small cap category. So far, if you're liking this video, hit the like button. Also, let's move to the next category now. The next category I want to speak about is the Flexi Cap mutual fund category. Have a look at my screen. You will see that Parag Parikh, as I spoke about earlier in the video, Parag Parikh has only fallen by 1.49% in the last 6 months as of March 7th, 2025, followed by HDFC that has fallen by only 6%, Motilal Oswal at number 3, 8.11, White Oak 8.93, followed by Sundaram at 9.54%. If you look at the most fallen ones, Samco Flexi Cap down by 25%, NJ Flexi Cap, Shriram Flexi Cap, Quant Flexi Cap, all have fallen 25, 22, 19, 18% respectively. You can see the category has fallen by almost 12.57%, and if you compare with Nifty 500, that is down by 12.62%. If you look at the volatility over a longer period of time, we are going to note here, for example, if I come down here, show you Bank of India is the most volatile Flexi Cap mutual fund, followed by Samco, Shriram, ITI, Motilal Oswal, and so on and so forth. If I speak about the rolling returns, last 5 years, Quant is number 1, 30% yearly return. If you look at the last 5 years rolling return window, HDFC is number 2, followed by Parag Parikh at number 3. Here is the fun part for you now. Parag Parikh has fallen the least, only 1.49%. But if you look at the overall longer term returns, it has still managed to give 24.50% return. It is at number 3. What is it telling you that? So if you don't want the volatility and want decent returns, then that is giving you the sweet spot here. But if you are okay with the volatility, Quant has managed to beaten Parag Parikh over last 5 years. Again, it is not guaranteed that in future this will repeat or not. That is not guaranteed here, but past is telling us some data that we definitely can't really ignore. With that, let's move to the last category, which is multi-cap mutual fund category. Have a look at my screen. You will see that in the last 6 months, Motilal Oswal multi-cap mutual fund has managed to deliver positive returns. This is the only mutual fund I have seen in these 5 to 6 categories that has still managed to give positive return in the last 6 months, 1.34%. At number 2 is SBI Multicap Fund that has given 7.98% negative return. So there is a huge margin between number 1 and number 2, but still SBI has done a good job here, followed by White Oak, and then Axis at number 4, Baroda is number 5. If you look at the ones that have fallen the most, here Quant again, Quant Active Fund has fallen by almost 19.84%, followed by ITI, Tata Multicap, Mahindra Manulife, Kotak and DSP. These are the ones that have been falling the most. If you look at the category average, Multicap is down by around 13%, Nifty 500 12.62% overall. If you look at the longer term volatility, then in multi-cap space, you have Motilal Oswal, the most volatile one, 20.41. But in this crash, it has beaten its own record, and in this crash, it has given positive returns. Now comes at number 2, Quant, very volatile, Bank of India, Mahindra Manulife, ITI, HSBC, Kotak, all these are very, very volatile multi-cap mutual funds. Now, if you look at the rolling return data, what you will note is that in the last 5 years, Quant Active Fund again has given the best rolling returns, 26.42. Here in this data, you won't see, for example, Motilal. Why? Simply because Motilal has not completed 5 years of rolling return data. Therefore, it is not there. It is only considering those mutual funds that have at least completed 5 years of history. I think rolling return only makes sense when you have that much of data. Therefore, Quant is number 1, followed by Nippon, Mahindra Manulife, Baroda, ICICI, ITI. These are the multi-cap mutual funds that has given the best returns. So in this video, every category I have covered, almost every category I have covered, given you a lot of data. Please let me know if you have any questions. I would try to look at your comments and try to answer as many as humanly possible. Also, if you like this video, hit the like button. You can consider joining my YouTube member community. I speak about mutual funds, stocks, ETFs, various other assets tactically, and I bring these insights almost on a daily basis so that you are learning almost on a daily basis. I hope to see you in the next video. Until then, keep rocking.